How to get a business line of credit without collateral and even a secured line of credit over $250,000 plus 0% interest funding with the credit card stacking method. You will want to stick around for that to add this on top of a true business line of credit or do one or the other depending on what you can and can't qualify for. Hi, this is Michael with Viral Funding Solutions. I'm a business funding expert, business loan broker expert, pre-underwriter slash underwriter who's been able to help a lot of businesses acquire the right type of funding under the right strategic partnership and roadmap. And in a second, I'll be going through that document you see on the screen, scrolling down, showing you the details to different business lines of credit and credits, and what it takes to qualify. If you're unsure right now in this market, it's very hard with inflation, interest rates, the impact of the economy, a lot of different factors that I've been following and tracking for some time. It's hard for a lot of people and businesses to stay up afloat, to get enough profitability, cash flow margins, get enough product, services, do a lot of different things for real estate, for inventory, marketing, and advertising. It can be a combination of things. And I've heard a lot of different things over the time that I've been doing this for many, many years with different business owners of different capacities, strengths, and weaknesses, helping them improve their business in different ways. And like yourself, I have my own business. In fact, businesses, one where I started in the digital marketing agency, lead generation space some time ago. That was the very beginning. One in the health affiliate marketing space, helping people with vitamins and supplements, ergonomic desk chairs, seat cushions. I'm sitting on a few of them you can't see now. Other products and services, physically, digitally, and much more. I ventured off into other affiliate ventures after that, showing business owners how to use different software, a lot of other things, and then getting into other ventures and verticals. And now this has been my primary focus as a business funding expert. So I just wanted to give you a little bit of background and just to let you know that I value you as a person first and foremost. If you've been searching online how to find a business line of credit, how to get one, and not everybody's giving you everything and anything, you have to question that. But more than questioning the knowledge or the aptitude is the hunger in the person. So in me, I'm a Libra, in case that makes a difference, but I'm a very loyal, trustworthy person. I value integrity, being humble, commitment, community, fitness, amongst many more things. I'm very well balanced, emotionally controlled, and I'm a Libra, or excuse me, I should have said I'm an introvert. That's what I meant to say, even it happens to me. So I'm very analytical, cerebral. I don't talk much. I do more. I show it with my actions than I do with my words. I just wanted you to know that. And I went to school. I educated myself. I studied sociology to begin with, and then I played Division I soccer for some time, and then I transferred into chemical engineering. That's just how my brain works with systems and math and numbers. Always had a strong point in that. So I did that for some time, and then I had a pivot only because I wanted to start a business, not that I was forced to, but I wanted to begin one. So I thought it would better pay off for me to go the business route. So I went that way in school. And thereafter, I've worked in construction, manufacturing, warehousing, was a ramp agent at some point in my younger 20s, a lot of this, and just figuring out a lot of different things. And not that I was unstable. That's not it. It's just I was figuring things out. Not everything is linear. So I grew a lot in a lot of these manufacturing, construction, and a lot of other roles, and eventually getting into financial logistics for a huge contracting company servicing HP&P South, doing a lot of data crunching, inventory control, management, working and coordinating. That was a big role of things, moving things around. I still have to lift a few things physically here and there, even though that's not what I wanted. And I'm not genetically gifted to do those things, just don't have the build for it nowadays, especially. But did it for a lot of stability reasons. It was slower. So I do a lot of stuff on the computer, but that company went down under. I had to go back on unemployment benefits and food stamp cards. And just picture introvert me being somebody who goes to a grocery store, couldn't even lock eyes, make eye contact with the person at the register. And even when I did, it felt bad, just happy to walk out of there. And I didn't want to continue to let my own family down with a lot of this. And so even just going out to pay for a meal, even if we split it, half, or I paid 70, they paid 30, or however it was, one person. It's just like, even if I had it, I just felt guilty. And I didn't want to continue feeling that way and towards my family. So I just wanted you to know a bit of that. Now, we're going to go into this document and go over things, but down below in the description, there will be a questionnaire form. I may show you at the very end that you can fill out some simple funding details. And what I'll do is I'll pre-underwrite it. I'm able to look at it. It's not an application. I am not a creditor. This is very safe and secure with you and I, as I have done that with many before you. And I'll send you back a very highly personalized and customized email response, including a PDF showing you your best funding option and options thoroughly broken down, and even information that you're going to get here, but it could be more customized to you, whether you qualify or don't. If there are certain numbers that I may provide to you, then I may provide to you if it makes sense to, and a few other things that do get updated over time. So you want to be in the know. So down here, we're going to start off with a business line of credit through the FDIC bank, or an FDIC bank, you could say. And I have many FDIC bank partners. There's not just one that I'm going to start saying, well, hey, there's this one. There's no point in just naming them all. In time, you'll know. In time, you'll know when we go through the process who's looking over what you need to look at, or who's considering you. And also be careful, because in this market right now, in the downturn that it is, there's been a lot of releases recently. And I try to keep you guys up to date, but like with the other side of things, like on the cash advance, lump sums, bank term loans, SBA loans, those are already were a lot of the time hard pulls. Now with cash advances, merchant cash advances, or the hybrids or other ways about it, they're going to even look at doing a hard pull after the contracts are signed. You get an offer. If you accept it through the contract signature and date, etc. And then that gets pushed through a final underwriting check, or bank verification, and a few of these other things. And at that point, you just have to be cautious, because if you've been shopping around, not only for lines of credit, but cash advances, bank term loans, trying to figure it all out, I get it. I've been there. I understand where you are or where you've been. But now is that time to say to yourself, I need to align myself with somebody, but not just anybody, but an expert who knows their stuff, but then too, has the right values, vision, and mission in their own life personally, not in just business. Like, yeah, that's one thing, but who are they as a person? And if you've been following me for some time, you would know that. And if you filled out the questionnaire form and you receive the response back, that's another thing. And if you yet to get that back from me, it's okay. It takes time. Be a little bit patient. I get quite flooded at times, but you want an expert at the end of the day. And I'm very organized, punctual, and disciplined in what I do. So right here, let me give you some details. And again, this is subject to change in time. You might see interest rates change up in here, up and down, and you may get a different format whenever I submit the questionnaire response back to you. You might see some additional details, some extra stuff that came in from this lender specifically, indirectly or directly. Now, there's a way where we can look at this in-house and say, hey, I have multiple banking partners. Let's go look at 2 to 3 in one application that protects you and your credit. It's not going to be shopped around and backdoored this deal to that deal so that lender can make more points on this. Like, you have to be careful with a lot of that. And again, it comes back to, if you're going to go get even just soft inquiries, a lot of recent activity can decline you. And when you're ready to then get funded, there's going to be a higher rate because they show past history of you doing that. So a lot of lenders can see and notice that. Can't tell you how many times people go through that. They already submitted their file here 3-4 times. They were declined. They thought over here that it get approved. They have a huge misconception and belief about it. And I'm here to help you finally at the end of the day figure out what you need to do and how to prepare yourself, because you might not be funding ready, or you might not be able to qualify for a business line of credit, but there are other options. And there might be just a soft pull throughout the process. There are lenders who will do hard pulls. A lot of lenders are starting to turn to hard pulls, even the lower tiers. The higher tiers, they might not even require that. Even them, they'll require it. So you'll be notified. You'll know a lot of that throughout the process, throughout that part. But we'll continue here. And it might just be hard pulls throughout the rest of it a lot of the time because of the market. So details, the ranges from an FDIC bank you normally will see, and I see a lot, is about 8.5 because of the prime rates being at that point, to an additional 2 to 3 plus points and above. So about 15.99% APR, more or less. I'm not going to start breaking down the amortization or the remittance schedule right now. If you had this over 12 weeks, or if you had this over 18 months, or however we have to calculate it so it would work, but you'll know that you'll have that stuff, or at least we'll know on our end, so you can be better adjusted. And approval rates exceed 70%, just so you know that those who I bring in, as well as Those who are ready, who meet the criteria, a lot of the times get pushed through the final underwriting, and that's a very good sign. So this is a low-cost bank financing option that will allow your business to grow and thrive at the same time. And if you don't have time in business, I'll go over a few lines of credit on that detail. I won't cover too much of it in this video, but I'll link it to you down below. This is one where if you just have 2 years normally is the basis is what you want to have at the end of the day. So anything under 2 years is going to make it harder. Some of these can be with 1 year with a fintech company with the preferred line of credit, but it makes it even harder. So normally anything, or for anybody who has under 2 years time in business, I don't recommend going to go get like a no doc line of credit, because they sometimes can get pushed through if you have no time in business, but they go up to 50K only. And if you go over 50K and request that, they're going to ask for verification of revenue. Specifically, they want to validate that it is accurate with personal and business tax returns and back over year to year and year to date, which you have now, P&L and other stuff that they may require. So just so you know, that is there. And if you don't have a line of credit, I'll give you another option in a second on like credit card stacking. So please stick with me more than just a second, actually, because I got to go through a bit of this. So this is a low cost, again, bank financing option that allows your business to grow and thrive. That's the point of this, making sure you can use that money to double, triple, quadruple your revenue, your sales. Make sure you increase your gross, your profit income, your net income, your margins overall, your units per sold, your customer acquisition strategy, your lifetime value of a customer, lifetime gross profit of a customer, how many times that one customer comes back and purchases, how many purchases did they make. So it's very important you understand your volume, understand your metrics, understand how a lot of this has an impact, and how do you increase, how do you decrease expenses, and do a lot of the stuff you need to mitigate risks. Just imagine what that lower cost financing would do for your business. It's really good stuff that a lot of people are jumping on top of. No upfront fees at all, so you don't have to worry about that. Like there's no application cost to come in. I'm not going to charge you. I know a lot of brokers and agents will charge you for loan packaging, and I may at some point come back to that. I may not, very likely not, but a lot of them will just loan package because they make their money on the front end that they can repay back, continuing to advertise for their business as well as on the back end. And you might not get funded, but they took some money. So do you really want to work with somebody like that? In cases it makes sense to. Other times you look at it and go, well, who's the person that I'm working with? Do they really know their stuff? Do they really care about me? And I care more about you in your health and your relationships and your wealth on your personal side. And then it comes to your business. So I want to make sure you're stress-free, you're taken care of at the end of the day, because when you return back to your family, things are going well. And you can even take some time off yourself without having to worry about checking in your business and just living in that moment. This has low interest fixed monthly payments. You could see weekly, but a lot of this usually with banks you see are monthly repayments. That's how it's structured. We're going to get into some of the weekly and even daily soon, but that's more with fintech lenders. The funds can be in like 10 to 15 days, which is really good. Sometimes it can take 30 days because keep in mind, you are dealing with an FDIC bank insured. So whether it is FDIC or not, you're dealing with the bank at the end of the day. So whether it's a term loan, it's a line of credit, perhaps it's even business, personal or business credit cards. And it depends on how you get those and where you get them and where you were present at the time and a lot of other factors to consider. One-time success fee after successful closing on a sliding scale starting at 6% for the lowest level, and it could cap out at about 2.5% or so. That could be variable and adjusted. More so it's not, it's a fixed though. It's what you're going to see for the majority of this. So the success fee is fixed. I meant variable as in terms of the interest rates. But yeah, that's what you normally will see. The market can change too. So you'll see some fluctuation potentially, but that's normally what you'll see it at. Here are the requirements you need to meet. Have a 680 FICO credit score minimum on all 3 consumer credit bureaus FICO 2 check. That's very, very important. And that is the key right there with the FICO 2. You've heard of FICO 2s and FICO 8s. There could be multiple checks from these providers. So we'll be looking at a couple of them just to assess the quality of your history, to assess how well you've been making your payments and what overall makes your credit look the way that it looks. And I've reviewed a lot of credit reports myself very quickly. Just so you know this, I've reviewed credit reports a lot of the times just with the soft pull. Gives me a big picture. And I'm not going to get into where you can go pull your credit at this time. I've helped out a lot of people with that, understand where it's best to look out for, what reports they give you, and what you can look at more in depth and how it is structured. But I reviewed many of them, especially when there are 0% interest business credit cards, or more so we're leaning on just the creative credit-based funding side of a lot of this. And I can know just by reviewing a lot of that, and it's muscle memory. I've been doing it for many years. And like I said, I don't talk much. I do more. I do a lot of reviewing, bank statements, tax returns. I do a lot of this stuff, and I can give you back the information that you so need. And having reviewed a lot of reports, documentation, doing cash flow profitability analysis, really understanding a lot of this stuff, I really do know how to help you grow your business. I know exactly per unit. So I know like the numbers when it comes down to doing the math. That's what I enjoy a lot of. That's how my brain works. So when I'm looking at a lot of this stuff, when people come to me, they go, I need to have a better yield at this. How do I improve that? How do I look at? Well, you probably just need to renegotiate your suppliers and vendor contracts. Or if there are none, you need to understand what payments are being made and how to readjust that. And even if you have the two together, what do you need to limit your exposure to, especially in this market where a lot of businesses and business owners are going out of business because maybe they're out of inventory, or they don't have management of inventory control, or it's just because they're not adapting to the current marketplace and they're not having enough of a disruption. They're not focused on building their own business and personal brand. And so understanding the volume of what you're doing, and that goes towards real estate as well, which I help a lot of people who are in real estate investing. So I get that side very, very well. Fix and flips, commercial properties, foreign nationals, rentals, multifamily, the list goes on, and how there are different applications for each. 2 years minimum time in business is what you're going to see the majority naturally here from banks. 250,000 plus minimum annual revenue for the last 2 years. This meaning, not to get it confused, not just the recent year you have 250,000 or the last one that we can verify, but the last 2 years you have a minimum of at least 250,000. Now I'm going to show you, I'm going to go through another bank term loan or a line of credit lender who would rather you just have 1 year, most recently preferred, of at least 250,000. And if it was one where you were just under or just too far apart, that's where we'll do a better analysis to understand, can we really give you that? Why was it a lot less the last year? Why was it a lot more? Now it's a lot less. You did meet that 250K minimum, but we have to understand how reoccurring this could happen. There's a lot of cases to be made. Industries acceptable are all except the cannabis related businesses. So whether you think you are or not in that business, like I've come across a lot of people who are in that business, even if they didn't think they were, and they're still classified as that. It's just something very minuscule that can cancel you and can disqualify you. Eligible states, all 50 states. Note, many times with bank term loans and even lines of credit with specific providers, you'd see a FICO SBSS business liquid credit score needed. So at about 155 plus or so, FICO SBSS business liquid credit score could be asked for, or even just a PAYDEX score of about 70 plus or so. But even without the business credit level being up there, it's a possibility it could work. It's on a case-by-case basis. And there are bank term lenders that I have that will still want to assess that you have some decent SBSS credit score. Maybe you don't have it by 5 to 10 points E-trans or however they're looking at it. Or they're like, hey, they're less of a requirement. We don't need to have that. Your personal credit score as a sole proprietor, or if you're not, makes up for it. It's strong enough already. Your payment history is bulk. You haven't missed any payments in the last 12, 24 months, and you've been current on everything. You have high payments. You've been meeting even before the closing time and a lot of this due date. Like, you're on it. But sometimes they will check that just so you have a heads up. And in case you needed to understand this, a lot of people come to me and they think, hey, I just opened up a few accounts. Am I ready to do this? Like I sometimes can't wave a magic wand. I can tell you should build about 5 to 10 accounts for your score to report this way. And then after you've built 5 to 10 accounts, where are you building them first? From where? How many payments are you making? And so once I know a lot of that, I can better guide you, but you also need to take it upon yourself to monitor your own credit, meaning that you need to check your business credit scores, your personal credit scores, not just one, but all, including FICO, SBSS, business liquid credit, and others. So the best way to do that, I'm going to leave for you down below in the description, or we can go over that in time. but to open up an account. When you open one up for free, you can see just the surface level. But when you get something that is paid, you get yourself involved. It is well worth your time as a business owner. And if you don't look at it as a liability, and as an expense, but you look at it as a growth strategy, you look at it as a way to increase your revenue and sales, that's going to completely triumph everything you have here. So you're going to have an additional cost, but it's going to be relatively low to the revenue and income you're generating and then what you take home. So it's all at the end of the day about what you monitor is what you know. It's what you don't know that hurts you more. Like I've told people, it's not what you know. What you know, cool. It's more of what you don't know is really what will hurt you most. And what a lot of this industry does is it'll disqualify you. There are a lot more disqualification factors than there are qualification factors I've seen in all different services. And I can work with credit, cash flow, collateral in all states, different places, even Canada, and so forth. Terms, the lines of credit may not have a maturity or term, although you do see 12 months, maybe 18, 24 months or so, but 12 months a lot of the times is what you see the usual. So the line of credit may not have a maturity or term. Again, offers and terms will be based solely on your qualifications, and that goes for each individual and yours and their file. Like I've said, and I told people in the past that everyone's file is different. So when a lot of this is on our back end, we're able to go through things, connect, and do things that you're not even seeing, but it's in the better good that we're helping you, and you'll be kept up to date by me. Each offer will be explained to you in detail so you can make the best decision you can for you and your business as well as your unique situation. So this isn't like, oh, it's going to be every type of bank. You go to a Chase Bank, a Bank of America, Wells Fargo. If you didn't know already, a lot of banks are having a hard time liquidating. They're having a lot of hard time with what they own and what they owe. And so it's hard for a lot of business owners right now, especially with insurance policies through banks and other stuff that are happening. It's become so hard for people to get their money out or get enough value out of what they get out. So a lot of people are merging. A lot of people are moving accounts to regional, then going into a bigger bank. Like you're seeing a lot of disruption, and people are trying to go into community credit unions, not also realizing that that's not always their best interest. They can have an account or multiple accounts open with different ones, but where do they a majority of the time invest their money? Where do they allocate a lot of what they get? Where is a lot of the banking activity? You have to have the right bank a lot of the times with these lenders, because if you don't, it could just be an online bank that just a lender does not want to work with, but you're going to go get a bank term loan. Like they're going to completely like look away and wipe away the file. And I've had that happen a lot of times. So you just got to be very cautious of what you do and who you give your information to, because a lot of people on YouTube, a lot of blog posts, a lot of outdated stuff, as well as if it's up to date, is it a carbon copy? Is somebody just copying? And you just don't want to see that happen, and be very, very cautious of what, again, you get out there. Because again, it's a very red blood ocean market where people will overpromise and underdeliver. They'll bait and switch you, tell you can get a line of credit, then they send you into a cash advance or something else completely different that you didn't want. They got you cash advances when you could have got a line of credit and a lot of this other stuff. It could be a 12-month term, more or less, as you'd usually see, if not more. Sorry. Only pay interest on the funds that you draw down or outstanding, and only for the number of days the money is drawn by you and your business. And I know I didn't really get into this in the beginning like I should have, but with a line of credit, you're able to just only pay interest and a withdrawal fee on what you take out. So if you were to get approved between $20,000 to $30,000, let's just say $25,000. Now, how much of that $25,000 did you need? Is this a seasonal change? What is it being applied for? For inventory costs and fees associated? Do you need to maybe work on a different product because the one you have currently isn't generating as much volume of sales? What happened? What changed because of that? Is it a seasonal effect? Is it something else completely different? Is it you not having enough inventory or inventory control? There's different charges, different applications you weren't prepared for. If you were selling your units, 2 units a day in a pain relief cream, and over 30, 60, 90 days, 30, 90 days, you needed to account for that inventory, and then you order more. There's a lot of different reasons, but that's where I'm going to leave it at for just now. Payments are monthly, never daily or weekly. That's normally there what you would see. And that's a major difference when you go to a bank. But again, it's a bank at the end of the day. And there are online bank term loan lenders. There are derivatives from just going to the top online or top physical banks like you've heard out there from Chase, Wells Fargo. Those a majority of the time you won't see from these. And that's a great thing because it works in your interest. A lot of already those other banks don't necessarily understand your use of funds. And if they don't understand your use of funds, a lot of the time they'll decline you for that. One thing I do want you to know before I get into the rest of this, the approval amounts, 4 lines of credit. Oh, one thing. You take out 25,000 or you get 25,000 approved, you only need a 10,000. You only pay on that 10,000. Not like a lump sum, you got to pay the whole 25,000 amortized over 6 months, 12 months, or however long it is, whatever product it is. And that's how it works. It comes back, you pay it off completely, you get the original 25,000 back. So that's a great leverage point. But with the approvals, you normally see 10 to 20% of your annual revenue that is approved for. There's a few other calculations in that, but I'll just give you that for now. And with a lot of like fintech lenders outside of these, and even with these, you could see 40 to 60% of your monthly revenue approvals you would expect. So it's relatively low when you think about the alternative, which is a lump sum, like bank term loans. Those would get you a lot more. So if you were to get like something for like 200,000 through my FDIC bank lender or whichever one it is, and you were wanting a line of credit, we can look at one application and on our back end evaluate you for both products. Doesn't mean you'll qualify for both or both at all, or any in that case. So you might get something for 200,000 with a disclaimer on that. Not everybody gets approved, but 200,000 in a line of credit, they might only want to advance or forward you that 55,000 or closer to 70,000. It just depends. And in the market right now, it's really hectic. So getting a line of credit approval high over 100,000, it's very hard unless you're generating millions upon millions, like even 10 million and above. It can make it quite difficult to get approved for even over 100K. There are cases where it doesn't have to be that high of annual revenue, but it is a lot harder, especially with top tier banks looking at 4 to 6 million and above in annual revenue that you should be making. And there's cases with profitability and there's other stuff. But that can change and it can vary. So important notes, any owner with at least 20% or greater ownership stake will need to pull their own free credit report, the full report too, not just the summary. I've seen a lot of these, just so you know, and I said that earlier too. I highly recommend using Experian free credit report. You can look that up. There are other ways of getting it that I'm not going to get into all of that right now, but there's one method. If you pull your own free 15 to 100 page PDF, it should be like that, more or less report. It will not count as a pull on your credit. Again, it will not count as a pull on your credit. If I or we, as in the team, do it, it will. So you should do it yourself. No hard pulls until you go to closing. So that's how you see that here. And this is a bank again. All owners with a 20% stake or greater should ideally have a 660. This actually is adjusted here to 680. Minimum is usually what would be the requirement. Credit score with all 3 credit bureaus. If only one business owner can meet the 680 or sometimes 660, but majority of this is 680 minimum, we may still be able to make this work. We have other low-cost bank credit facilities where your file may still be a fit. So just keep that in mind. Having existing debt is fine. Many applicants who do come through, they are successfully funded with having existing debt. At the time of their application, you might have another position with a different bank. We could try to work that out depending on how long ago, or you may have a term loan or something else, an advance included, and you needed something else in a different position. Okay, let's see how we can work that through. Having debt does not automatically disqualify you. It's another data point for us that helps us to have along with your company's other specific metrics that then will all be factored into your approval. So I'm a data person first and foremost. I think you got that without me saying. So I review and the data. How do you know what to adjust if you don't have numbers? How do you know when you're ready to grow and expand and even scale if you don't have those numbers? If you don't know that your employees are the actual problem, if there's 1 or 2, how did you assess that? Why did you relieve people? Why was it without the reason? Okay, so you have to look at things a lot deeper. The question you should look at and what we'll be asking is, can you easily afford the existing debt and potential new debt? Like when you already have a lot of debt to income, especially true with term loans, advances, when it's exceeding over 35, getting 45, 50%, Now we have to really make a calculated decision to see when's the maturity date of those. Have you been paying those on time? Will that be completely paid off? Okay, what will then happen if this and then that? Many times we will get a decision of a yes or a no in 3 to 4 business days. Other times it's a bit longer. The good news for you is that usually we have a decline file that comes back sooner. So in theory, in retrospect here, the longer we hear nothing, the better the chance an offer will be extended. So just in case you didn't hear from me or I just checked in to tell you we're still looking at this and maybe there's something that we're looking at. The underwriting process can take up to 30 business funding days as well because everything at a bank takes time. And the good news is we can get a yes or no decision in usually just 3 to 5 business days, as I said somewhat earlier. Is there a personal guarantee? Sometimes a business applicant, as in yourself, you have strong enough credit as a business only to borrow funds without the owner's personal guarantee, PG for short. Other times it will make the bank feel more secure to have ownerships, PG, multiple, if so, multiple owners. Each scenario will be different. In either case, if you plan on repaying your debt, it really shouldn't matter, and it shows responsibility, accountability, and maturity. I'm not saying you are not. There are others who obviously it goes without saying, but like I still share with people, it just comes down to accountability and responsibility. So don't ever take that the wrong way. If you have strong enough credit, you wouldn't be in a position you are now. You just need to sometimes hear it, and other times I wouldn't bring it up. But just so you know that it's all about accountability and responsibility. And a lot of this, you're going to expect to see a PG, even with business credit cards and other ways. No collateral to pledge. All credit facilities being applied for here are for unsecured financing. This typically means that as the borrower, you are not required to pledge collateral to secure the transaction. Here, let me move this. Sorry, something in my way on this side. However, many banks will still place a UCC lien on the general assets of your business. And if you have multiple, they may require that. But a lot of the times, generally, you're going to see a UCC lien on the general assets of your business, blank lien and that. So don't be put off that you have to require to add collateral. With other banks and other locations, hey, real estate, affordability with account receivables, other things, they will a lot of the times ask for it, and other times they won't. It just depends on how strong of a borrower you really are and how much they need to take in and how much equity, liquidity, cash on hand and in the banks, other things that will be requested and asked for. So this does two things. It establishes the bank as the lien holder for legal purposes, which is true, and I've seen a lot of this. And two, it alerts other future lenders that you have an outstanding debt, which can serve to help you avoid getting over leveraged in the future. That's the worst thing. And there are people out there who will try to over leverage you, who will say, hey, it's okay, we could get you another position. And at the end of the day, you can't even make your repayment. We're probably the last one you can pay back, or the lender will get their money back. Or even if they're first, the predictability needs to be there. How to apply? If you meet the qualifications, here is then what will be asked for. A 1-page fillable working capital application. I will send you this in time if this were to be the best and right option for you. And I'll look that over. I'll review what you've put on there, make sure everything is accurate here and there. You then have to go to Experian.com, or there's another place, but Experian.com is normally where we will request it from, and download your free credit report. The full report can be anywhere between 15 to 100 pages, as I've said before. Please download the whole report into a 1-page PDF document format. I will not even begin to review if I don't see that it's enough pages. So make sure you have that accurately so that I can then do a good format review. The first two above can be sent faster. And then after our initial review, if we decide it's best for you to move forward and for all parties, I can then collect and review the rest of these documents. Sometimes I may ask for it, all of it up front. Other times, for the majority of the times, I'll ask you to send a few things like the application I can send out to you. It's a very specific one and tailored to what we're trying to accomplish. And then after that, the Experian report, there's a review initially, and then the rest of it here, which is number 3, a copy of your SS4, an IRS form showing your employee ID number for your business. Number 4, 6 months of recent business bank statements. Certain banks will even track that back to 12 months. All pages in PDF format. This is very important. I review a lot of bank statements, just so you know. So I'm not going to get into all the geeky stuff on this and what I calculate, but it's very important that I have that I can review. We need to know what liquidity, what problems, what issues, how's your cash flow management, how are you cash flowing, what goes in, what goes out, Where's money being moved? How is money being moved and allocated? How much do you keep into the account? Average daily bank balances. There's a lot more that determines how much you could get in an approval. So that's very, very, very important. And that's a huge key. So please send each month as a separate PDF attachment. What I do want to interrupt really quickly and say is, please have this like in a Dropbox folder, in a Google Drive. Even if you don't, yeah, send them to me individually if that's all you can do, or if you have options. But being organized, I'm not saying you aren't, but having that all in one place that you can even update, remove this file, put that one in, or you can keep it all in one place that when you send it over to me, that I'm able to look it over. I'm able to go through this, go with it on my team on the back end, go through things back and forth, go through it with the lender, instead of just getting all in one place, because I can organize it. That's fine. If you send it to me all in different, I'll just organize it. I have my ways of doing this correctly a lot of the time in Google Drive and in other places, but it's very safe and secure. And then I will look through things even more diligently. But to go back and forth with a lender and like go, well, I didn't have this, I didn't have that. Well, this is like, there's sometimes a substitute for something, but make sure you have these documents, because it makes it a lot of energy and time inefficient for then me and then even the team to bring this to. And it's like, now I spent 30 minutes where I only needed to do only one, like this needed to get done in a minute with such a tight schedule. And sometimes in the afternoon I have it open, so I'll take more time. But think about it. Put yourself in my shoes as a person, not even as a business owner, as a person, like what I could be going through. So make sure you have that as well as you can. And I don't ever pressure or bombard anybody, but please just have it ready to go if you can, not just keep updating. Number 5, attach your articles of incorporation. That's what I will request so I can verify you are in good standing and within the state, certification information, and this information that I look at a lot of the time. Number 6, 3 most recent business and personal tax returns. That's the bulk right there. That's the bulk of what these bank loan lenders and in other services, they will look at, but not all of them. 7, a completed business debt schedule. And as I said here, I can send this to you in time and in the future if and when this is the right service, if I haven't already. So I'll ask you to put that information into a specific debt schedule that I'll provide to you, or if you have one, but I can send over. If there is one to send you, that's how it could go. And you'll be informed if things get updated, where I'll ask for it this way, or this needs to get submitted. If I send you something, there's that. 8, year-to-date profit and loss statement and balance sheet. That's another big thing with the bank statements, the year-to-date profit and loss statement and balance sheets, as well as the business and personal tax returns. Like, I'll look through a lot of this. I have a lot of stuff stored, a lot of stuff saved, and stuff that I go back and I look at for businesses and I evaluate year over year. They couldn't get qualified this year, but then this year they have this revenue. They have this revenue the year before that. Okay, this is how much they profited. This is how much operational income. Okay, this is how their cash flow is looking at a 1.15. They're at a 1.35 DSCR global, personal, and then business, a combination of the two. Okay, this is how they look like in profitability. They have historical returns. This is where I more or less will see them. This is what their use of funds will be. Can they have that tolerance? There's going to be a lot of other things to look at. A copy of your owner, of yourself as the owner, or owners in general, because if there's more, driver's license, front and back, a clear cell phone picture is fine. So if you were to just take it like I do with my iPhone, just take a picture of it. You might already have it uploaded. Just send it to me. And that's what I value a lot. I pay close attention to the little things. Like I said, I don't talk much. I do more. You just see me here going through the material. But the littlest things, I'll even be telling people, like, I'm so grateful and thankful that you were able to give this to me in the way that you gave it, because in the time, because I can't tell you how many times that I get people who are like raising their hands in class, but never answer, or they answer, but then just don't show up the next day, or just go through all of these other things. And it becomes an excuse. It becomes a hamster wheel. There's times where the excuse makes sense. There's other times where I go, it doesn't make sense. And then you know yourself, you're making that and you're causing that problem. So as long as we don't have that, as long as we can get the ball rolling when you're ready to, I won't pressure you at all, ever. I won't bombard you like that. But just make sure you have things and you know the reality of this. Number 10, a copy of a voided check or bank routing / accounting number info. Once approved, the banks will wire your financing directly to the business bank account at closing. So make sure that information is accurate. We don't want to say the bank that you should have been sent that money to is this one, and then you go back and, are you going to scam us? Because there have been people that do that. There have been people recently that I've helped get funding, not through here in general, but more so with other services who go, oh, that money shouldn't have been deposited into that account. Can I share with them another bank letter or this? Like, it could be accurate. Other times it isn't. So just be very cautious that you're providing the right information, where you want that account, where you want that being dispersed into. The title on this account must match your application, no exceptions. So that means that. So business line of credit, option 2, via online bank lenders, FDIC, and more. I may tell you to skip. I may tell you to do this, depending on your file when you fill out that questionnaire form. But let's just move this aside, and there could be other things that I've put together for you. So here's this and some of the details. And I kind of outlined for if it was a situation where it would be hard to do because there's a lot of shifts going on, a lot of lenders looking at different things. Details: offering low monthly payments and competitive rates. Once an application is approved by the bank, the processing times can be delivered in a matter of days. And this here in the amounts are $25,000 to $150,000. 12-month term, interest only. Monthly payments, like we saw with the previous one, fully funded at origination. It's based on the approval line amount. So you may see something like what I showed you earlier in the percentage. Revolving structure or for flexibility, payback and draw as needed, as our lines of credit, how they work is, like I said, you get what you would get, and then if however much you need to use for what you need to use, and you only pay back on that interest and that draw fee. Sometimes there's monthly service fees if you keep it very long and it's for a longer term, and other things that you need. But underwriting based on bank statement data, so that's what will be looked at on our back end. Pricing, variable rate based on SOFR as low as 9.9% plus that SOFR. Options at maturity, that's what would be there when you're looking at how much of a term and what it would mature to towards the end of it. So that's kind of a little bit on that. 3 new line of credits that extends interest only period for 12 months. Get a new 3 to 5 year term loan to refinance the principal. So there are options to consolidate also debt. If you haven't thought of using like a term loan to help you pay down other debt, you might be in position. And that's what a lot of people do get those term loans too, because they look at lines of credit and go, how can I repay this down? I have also business credit cards and personal credit cards. So I'm going to use a majority of that term loan to pay that down because I've overextended. And now I have this and then that. And then I have a charge card, boom, from an American Express. There's a lot of different scenarios, and it just depends on what you're trying to do and what your end goal is. Full payoff, fees to the borrower, 6.6% origination fee based on the approval line amount. No fees for subsequent draws on the line. Pre-qualification requirements to meet for this one, instead of a 680 on all, and you're going to look at ideally here is 660. Other times with my partnerships, they will look at a 680 only. Other times they're going to ask for a 680 basis on all 3 consumer credit bureaus. 2 years minimum time in business. With this one, unlike the other one that didn't ask for normally a FICO SBSS score or those lender partners that I have, this one you're going to be required to have a 150 plus liquid credit score. That is, in other words, FICO SBSS. When it comes to revenue, it's best to be at least 250K plus in annual gross revenue, if not more. And that's the minimum, and that's what you saw in the last one as well. Some extra details continued. Your monthly payments may increase, possibly substantially, if you are approved for another loan product. Just keep that in mind. You're adding interest on top of interest. If you have more withdrawal fees, even if that changes its calculation to only have one payment, you're still having more interest over that term. So make sure you pay off, especially the lines of credit, as fast as you can, because once you start to grow and expand and you need larger amounts and larger volumes, then you're going to have to be more cautious of what your return on investment really is. So be careful of that. Number 2, required documentation would include 6 months of business bank statements, as what we saw earlier, a current business debt schedule, an identification document, and a voided business check. If there's anything more to be asked for, then that will be asked for, like tax returns and a few other things. Documents required to then close a voided business check and driver's license or other identification document. At 12-month maturity, you may choose to apply for new financing. Updated business financials will then be needed for underwriting. New financing after 12 months will incur additional fees. So that just comes down to getting a new and another approval. All loan programs, they are subject to credit approvals, income verification, and the collateral evaluation, blanking liens, UCC liens, and all that. Paying the minimum interest-only monthly payments will not repay the principal that is outstanding on your line. So make sure you make your payments in full, understand what you're paying. The bank makes final approval decisions, originates and services all loans. Additional restrictions, limitations, and exclusions may then apply, as what you see general. For fees included at a one-time 6% origination, as I mentioned earlier, at closing, and a flat $750 closing costs. So if in case you were wondering what are the closing costs, like a lot of us do, there's that. Standard wire transfers fees may apply on top of. While some lenders may charge additional fees for drawing funds for this line of credit, there are no additional fees for withdrawal. So that's huge. What is conducted is a soft credit pull that will not affect your credit score. However, though, in processing your loan application, the lenders whom we work with that request your full credit report from one or more consumer credit reporting agencies, which is considered a hard credit pull and happens after your application is in the funding process and match with the right lender who is likely to fund your loan. So just keep that in mind in the application and a few things there, how to get started and what could be then added. So what I wanted to mention there is there are multiple ways of looking at different products in one suite, meaning that if you came through a specific provider of mine, they could have bank term loans, SBA loans, lines of credit. Others would only have the SBA and bank term loans without lines of credit. Others just do SBA. Others just primarily focus on bank term loans. So it just varies, and it's not to say that because they focus all on different products, it's the best one to go to. So you have to be, again, cautious, like I said in the beginning, of who you give your information to, because if you're not going to the right source, you're just going to end up trying to do the same thing over and over and over. Oh, I heard this commercial. Oh, I heard it from a friend. Oh, and then next thing you know, even if it's just soft pull, that's a lot of recent activity, like I said. And if it gets to a hard credit pull stage, you're going to wonder, could I have gone more? Could I have done a different thing? Could I have done something similar to it? Could I have done something in combination of it? Maybe there's something else that I could have got. You don't want to be left wondering, that I even get the max approval amounts at the best terms and rates? Because what I have are the best partnerships with these lenders, the underwriters. And like myself, I have that underwriting mindset. I could be a full-time. I've always thought about being a full-time underwriter because that's just how my brain works. I love doing a lot of that, especially the back-end work. But for the opportunity cost and what I will do a lot on the front end, it makes sense to do it this way. And time freedom, energy freedom, and a lot more things. It makes sense too. But I know exactly what they're looking at and what they'll be pulling and what they're going to be going through in each evaluation at each point in the process. So it's best that you're careful about who you give your information to. So here, business line of credit option 3 via a fintech lender. I may say this is the best option. I may have some numbers for you. I may not have some numbers depending on what you're trying to do and other things that are adjusted and what changes over time. And like I said here, you can combine it with the lump sum, with the hybrid advanced term loan, or if this comes to where you can only get a fintech line of credit, but you could get a bank term loan. There are different situations for everything to look at. So I go into a little bit more details there. Details, 12 to 18 to 24-month terms. And here, like I said earlier, 40 to 60% approvals. Sometimes between 50 to 150% are the approvals, but a lot of times you see less approved for lines of credit, and it's a hard market. A lot of lenders don't go over 55,000, not even over 100,000. So to be even at that range, it's going to take a lot. You can use the funds however you'd like, as much as you'd want. This is a perfect way to utilize for all types of funding. And as I said, 12, 18, 24 months. The payment type, it's weekly, monthly. We'll decide if you get a weekly or monthly, if you are in the sweet spot or not. And the sweet spot I'll go over. The details are going to be a little bit below. Just give me a second. The monthly fee here, it's going to be $20 to have that. It's easy to understand of withdrawal fees, balance fees, when drawing funds or maintaining the balance that is owed. No prepayment penalties, plus big savings with early payoff. No collateral is required. You can lower your weekly, monthly payments by drawing out more. Longer terms can keep your payments down. Excuse me. Sorry, I lost sight of that right there. And again, like I said, you only pay interest on what you borrow, consolidate payments, no prepayment penalties. It's a revolving credit, and it can even build your credit history. That's one thing too, that this could be reported to one, if not more, business credit bureaus that can help you build your business credit. Not all of these lines of credit lenders will do that. So you'll see higher tiers who normally will, which is a big payoff. Balance fee is anywhere around 1% per week of the balance. So for every week you have it open, you are charged a 1% fee on the remaining balance. And it can be as low as 0.69%, and it can be as high as 1.39% per week. Withdrawal fees can be anywhere from 0 to 3%, plus depending on your file, if you are in it for a long term and want small monthly fees instead, and so forth. So that's what I mentioned, whether there could be a servicing fee of $10, $20 or so, more or less, maybe higher on that, but not always is that given. And I just give you guys an example here. So we're going to quickly run through this, and we are 50 minutes in. I'm going to try to end this in the next 10 to 15 minutes. So 0.69, here, let me move this, excuse me. I should say point, not dash. 0.69% to 1.39% interest. We'll just go along with it. We're not going to readjust all these minute details right now. Interest, cost of funds, in other words here. For example, let's say you get approved for $20,000 and you withdraw at the minimum of $1,000. With a 3% draw fee, that's $1,330. Then that would be then divided by your term duration, which you would likely get 12 months, but there's also 18 or 24 months. And it depends again on what you get. So if we divided that 1,030 into the weeks within the month, so let's say you get 12 months, which is in this hindsight, 52 weeks, then that's $19 plus the cost of the capital, which in other words is the interest, as we stated earlier. If you got a 0.96% weekly, this number will be given to you depending on the association of your risk, and there's other factors that are looked at. Weekly cost, then you pay $115 per week. So relative to what you would do in a lump sum, like let's say if it was a cash advance, you'd probably be paying $230, $330 plus every single day, or maybe it's $150. Or if you got a lot less of a amount, maybe it's just $20, $30 a day, or you're paying only weekly and you're only paying $100 a week, $80, $200, $300. But it's a good alternative, although just think about how you use your funds and if you're getting enough of what you need. But it can keep your payments low as opposed to you having at the end of a week, whether you're on a weekly repayment or on the daily, probably $2,500 at the end of the week, $4,500. Depends on how much you get approved for. Maybe it's $1,080, $1,060. Is that enough? Is that going to help you cash flow enough? You got to think about, what are you taking away from, or what opportunity costs are you foregoing? So you got to look at this and say, can I take that now and make double, triple, quadruple in a lump sum than what I would be repaying? 10,000, getting 20,000, paying back 30,000, 27,000. Can I make 30? Can I make 40? Can I make 50? In how much time? What would be your ROI? All these other cases, but we'll just leave it at that for now. So I got these numbers from taking the principal of 1,000, and I'll explain this to you in time. But actually, I'll go through right now. With your principal of 1,000, with your draw of a 3%, which you owe 1,030 on your balance, then divided that by the 52 weeks. There's a little bit of numbers here, so we're just going to speed back through this. So because of time, it can sound a bit confusing, but it's pretty straightforward. And numbers, things can adjust and recalculate as you amortize over the schedule that you have. An example for 10,000 minimum withdrawal fee at a 0.75% interest for 12 months, 52 weeks at a 3% draw fee. 3% is most common. Then you would see that. I'm just going to go through it all, but you see some of the calculations. The end result is what I'm going to explain here. $273 per week you'll be paying until you fully used up your principal of the $10,000. If 18 months of a term, you see here $228 per week. If 24 months, you see here $195 per week. But the goal isn't to leave it open for that full 24 months, because those are going to be more expensive. And if you take out more, that's going to readjust, and now your interest is going to be a lot higher. So just understand that. Now, if it's per month for each scenario above, then it's opened up the Grammarly. Then its respective order for the 4 examples above is 460 plus or minus, 1,092 plus or minus, 912 plus or minus, and $780 plus or minus. So the preferred line of credit, this is the required minimum requirements, is credit lines are between $6,000 to $10,000. Getting above $100K uncollateralized for anyone is very difficult in this market. Even higher tier revenue clients with the line of credit are getting theirs pulled back. So if you don't use it, enough of it, that's what I'm seeing a lot of. Have a minimum of $200,000 in annual gross revenue. It's not 250, but this is preferred. Obviously, you want to be doing more revenue. That's what we want to see, but at a basis of a $200K in annual gross revenue. Have 1 year time in business. The sweet spot, though, for you as the merchant is 250,000 plus in annual gross revenue, 2+ years time in business, 675 plus FICO Experian credit score. It can be as low as 625, but normally in this market, 700 and above is best. Those are the ones that are getting the highest approvals at better rates and more. Being in the sweet spot doesn't guarantee a monthly line of credit. It improves your chances, and approvals depends on a numerous amount of factors, such as possible disqualifications, high debt to income ratio, history of late payments, too many inquiries, credit utilization ratio is too high, you have an existing line of credit, credit report issues that need credit repair, recent bankruptcies, charged off accounts, and there are more. Other things that can happen is you just have too many recent inquiries on perhaps your Experian commercial credit file. There's probably derogatories in your business credit. You probably were declined, like it comes down to high debt utilization. Maybe it is limited payments on not just Experian, but they looked at Equifax and TransUnion, or just Equifax and Experian, and they're not happy with what they see. So there are other things that can get you disqualified for, like a background check, and there are many other reasons too, but those are just a majority of them. Restricted industries, and this is why it's still hard to get it, even though some of the requirements have gone down, is because it's limited to specific industries like construction, trucking, transportation, usually of any kind. You will not be eligible for any line of credit, and that even goes for bank loans. Banks, at times they will, but it's very hard if you don't have enough equipment. You don't have even more than 7 trucks, 7 vehicles, and on ground, on operation, not just sitting in your garage or sitting on your lot or where they are. Like, you just don't want to have that issue. And if you have a very limited amount, like, that's your revenue generating income stream. And then diesel costs, like, you're gonna have to pay those payments more, and other gas costs. Like, it becomes a burden at the end of the day, and you can lose a lot of revenue if you lose a truck, depending on what the reason of that was. You completely have to get something new or add more to your fleet, however you look at it. So higher risk industries, they will not be eligible for this product and product feature, and that is construction. All construction classes. It doesn't matter if you're in roofing, you're in tiles, you're in concrete, excavations type of work. Does not matter. Construction on all classes with these fintech lenders, they are not going to want to do that. Now, that could change in time, but that's just what you're seeing a lot of in this market. Transportation and warehousing, all trucking, transportation, you can say a form of logistics. You have trucks on ground, and that's what makes the majority of your income. Like, that's what we need to see. And if we calculated that and thought, okay, it won't work, then it won't work. Wholesale trade, import and export, you can think of that. Accommodation, food services, it does include restaurants, all restaurants. That's going to be hard. So if you're in the restaurant space right now looking for a line of credit, it is hard. Even going through banks, they're a lot of the times going to decline you. Accommodation, okay, excuse me, I said that. Real estate, rental, and leasing, all real estate. So if you are in that space, that's just hard. But I'm going to show you guys an alternative to this, since you guys can't get a line of credit. Mining, oil, and gas, that just goes for anything, even banks, term loans and stuff like that. SBA loans, in fact, and others. Administrative support, waste management, remediation services. So think dump trucks, vehicles moving, a lot of coordination, people losing employees, a lot of other stuff that happens. Best for retail, healthcare, marinas, repair shops, e-commerce, metal fabrication shops, and more. Note, if you'd like to get a line of credit, we can also evaluate you for like an advance/term loan, so you can get both and use your funds how you need to. Or if you were only to get approved for one, we can take a look at that with one application a lot of the times. So there's a little bit about that there. Documents needed, a lot of it will be 3 months, 4 months in California. And a lot of states are actually adopting 4 months, so you could see it by the time 4 months in total. But there are a lot of selective states that will ask for 4 months in bank statements. Voided check, copy of your driver's license. You'll be able to safely and securely upload this documentation so it is seen on the back end, on our back end, and everything is given there. Or if I were to ask how you can send it into me directly, and then that then gets sent this way. There's different ways, and there's new disclosure laws. So a lot of the times, depending on the state, I can't collect it, but you'll be known how to submit it so that it can be looked at on the back end. Excuse me. So all of that will be given to you in time, so you understand what to do. But there is that, and how it would be submitted. There's information. Another one that I recommend, I might say it may not work. It may work to you. But between 5,000 to 100,000 to draw from your convenience. There's another one right there, and I want to make sure I'm looking at one of my other documents to make sure I didn't miss anything. But for a lot of this, you're going to see a minimum of 15,000 in monthly sales / revenue, a 550 plus FICO credit score. Although that's going to make it very hard to get approved with that credit score. A lot of these fintech lenders at that level, they're going to want a 680, but majority of them want 700 credit profile. And if a construction company were to come through and get approved at that, they're going to want to see somebody doing 100,000 a month, if not 200 to 300,000 plus. And even then, it's hard to get a line of credit for construction transportation, and it's usually going to result in a decline. A lot of this is based for US-based businesses. Minimum NSFs, negative days, and current loans are considered in case you do have other ones. So automatic weekly repayments with these, hardly monthly in this market, usually weekly. Easy to understand draw fees, balance fees when drawing funds or maintaining a balance owed. No prepayment penalties plus big savings with early payoff. No collateral for these fintech lenders. You can lower your weekly payments by drawing out more. Longer terms can keep your payment down. Balance fee is anywhere around 1% per week, like I said somewhat earlier. So as an example, I'm not going to go through all of this because I showed you some of that earlier, but it could change depending on how much you get approved for. Qualifications, 15,000 plus a monthly revenue. But in this market, I see a lot of the times between 40K to 50K. A lot of the times you're going to want to see at least 400 to 500,000 plus in annual revenue with 700 plus credit. It could potentially be doable with that. So those requirements are more or less fictitious, and the market can be volatile, so you won't always expect that. 550 plus owner's FICO credit score. Won't cut it a lot of the time, like I said here, and what I said earlier, 700 plus credits is what it is like right now in the market. 1+ year in business, need more like 2 years though. That's what a majority are going to be looking at. Possible disqualifications, I mentioned quite a bit of that earlier. And here I just went through some of the stuff I mentioned earlier. Another one that could work, another fintech lender, a lot of them are going to want 25,000, 600 minimum credit, but a lot of the time 700 in this market. And like what I said earlier on the time in business and the annual gross revenue, lines of credit being 1% to 3% in rates per month. You might see daily in that payment structure, weekly or monthly. A lot of the times you see daily or weekly with a lot of these fintech providers. Secure lines of credit against receivable rates are prime rate plus 2 to 8%. So depending on the prime rate, that can be then adjusted because the market will change that a lot. Approvals for lines of credit can be typically 100% of your monthly sales and as much as 150% or so, depending on factors such as your credit score, industry type, time in business, debt, etc. But in this market, you normally see 40 to 60 or 40 to 70%. A lot of the times, as lenders are more conservative with lines of credit in this market. There's a little bit more there on the things that we've already gone through. Some of the credit requirements or some of the total requirements there. Documents needed for under 100,000, what I would need. There's a little bit there. I'm going to quickly speed through this, but you see that in documents needed over 150,000, different things can change over time as well. Another option is like number 6, a secured line of credit. And we're getting to the end here. Backed by accounts receivable, collateral. And this is if you have unpaid invoices and you haven't used an invoice factoring company or you decide you want to use another. Done quite a bit of this. And if you're thinking about using those receivables, those unpaid invoices, that can be taken from you to bridge the gap for cash flow. A lot of people are needing right now. They need about 6 to 12 months out, especially with a lot of transportation companies, a lot of emission changes, a lot of natural gas that I'm seeing, a lot of different changes. But a lot of companies are having a hard time adjusting to that and making sure they reduce it. There's a lot of little intricacies and logistics to that. I'm not going to spend time with that right now. But streamlined, transparent process, 2-day decisions, accelerated closing, up to 95% advance rates, no industry restrictions usually is it. Validity and personal guarantees are offered. There is no set payment. You will pay upfront fees to set up the line of credit, the account receivable AR line of credit, if you've heard of that. And then you pay down the rate when the money is collected, which is normally within 30 to 90 days. Qualifications, 250,000 in aging account receivables or 1 million in inventory. Usually though, and specific industries too, you're going to see 500K total of AR over the last 90 days. So 30, 60, 90 in total. Not that you have to have 500 each month for 30, 60, 90 days, but in total over 30, 60, 90 or 3 months, you could say you have at least 500,000 is what we want to see for account receivable financing in a lot of cases. No minimum FICO. The credit is not the requirement for these. And so the ones who I'm seeing winning in this market, in case you were wondering, are not the ones going through credit-backed funding. It's not the ones getting the bank term loans, the lines of credit, fintech or not. or equipment finance. Equipment financing is seeing a big plummet, pretty down. Specific for some industries more than others, but it's as a global. But what I'm seeing a lot be the difference right now is somebody who has collateral, not even credit, because it's so hard for people right now to recover. They're still recovering, or they're taking on more debt just to stay up afloat, or their investment is not going and it's not stretching far enough. Their money's not going far enough. They're not having enough to liquidate for what they need to use the money for. And there's a lot of other reasons that I can get into, but I'm not going to do that now. But if you have collateral, real estate, and I'm going to get into some of that in a moment, you have unpaid invoices, you have inventory, you have equipment. There's even cash out refinances on commercial real estate and investment real estate that you own and free and clear. That is very helpful to keep your rates low and be able to afford the debt over a longer period, or if it's a shorter period, but you took the money that you needed, you invested, took that money out, the equity that you have, as much as you needed to. And so you can net enough to, and you can take that and use it however you needed to. I've seen so many cases, people taking that to help somebody else start their business or continue to operate the business. It's continuing to get them employees, continuing to attract better customers, target a better demographic, psychographic. All it is an adjustment that I've seen in businesses, like demographic. They didn't target the right people. Yeah, they were an Amazon seller having people purchase their product, but if they had focused on this audience better, or if they knew their customer retention strategy better, then this would help and equip them to then go after people in a lookalike audience, or do this like this. And they would attract more of those people, thus increasing their revenue and sales in less than 30 days. So that does a significant difference, but there are different levers that need to be pulled. So no minimum FICO, that's passed on to your customer. That's what the account receivable company, the factoring company, will look at, is what is the consumer that's purchasing your stuff, what's their credit, or what are they doing? What's the likeliness of them going through this? No minimum time in business, facility size 250K to 25 million, but realistically it can go high, and even higher potentially. 12 to 24 month terms is what you see with a lot of this. So somewhere in the same vicinity as you would see with a non-collateralized line of credit, but perhaps that can go even beyond 24 months, as can happen. Rates start at prime plus. So just so you know, that is there. It could be prime plus 2 to 3%, prime 2 to 5% or so. Documents needed: 60-second online application, recent 6 months of bank statements, 6 months of your recent credit card statements, if applicable, if that's how you're taking in payments and so forth. Most recent business tax return. If there's more that I would request, then we can go from there. So there's that basis. Let me make sure I cover that as in full detail. So a lot of this can be done quickly. It can be like 2-day decisions. It can be done in matters of days, 4 to 8 days, 10 to 15 days I've seen. But just understand that this is collateralized of an option. So sometimes it takes a little bit more than the other ones, which can take, like a fintech lender may be done within 1 to 5 days. Sometimes I've seen that even go over, but there's that. There's the inventory financing option, asset-backed, revolving line of credit as the AR is. So if you have inventory, that could be another option. Facility size, 250,000 to no cap. Line of credit amount fluctuates as your inventory fluctuates up and down. Rates start at prime plus 2%. So relatively low. This is like one of the best affordable options. So anytime you have collateral, you look the most attractive to not only a bank term loan lender, but others, private lenders, or however you're setting up something. So that does a lot of good. You get up to 85% financing on inventory liquidation value. Perhaps it's up to 95%. 7 to 14 days application to funding. So there's that as well. Qualifications, like I said, 1 million in current inventory, 1 million in annual sales. I've seen a lot of business owners who come down and they go, well, they only have like 850,000. They're short, but they have a lot of offshore inventory that they're going to bring. Like, we don't know what that offshore, where that industry is, like where that collateral is. We can figure out where is it being stored, why is it being stored, like the cost, the shipping costs, like how fast it can get there. And it's like you're playing this game with people that you don't know if you'll have it, if you can liquidate that, if they can turn that over in case you were to default. So you have to be very cautious when you're considering that, because a lot of the lenders won't consider that. And also when it comes to like account receivables, if you're doing a lot of like progress billing, like construction companies do a lot of the times that won't be accepted, even though you have a substantial amount, because things can fluctuate, things can change, and you also don't get your payments as quickly. So what's to say that you'll be able to make the payments back? There's more things to consider. 1 year time in business, no minimum FICO. Although a lot of the times you're not going to see no minimum time in business, but preferably we do want 1 year time in business, and that's obviously a factor, and that's a given, especially if you have that much in inventory or you have it from a different business you're trying to help fund, you're trying to do other scenarios. So there's that. Account receivable financing, I already covered that earlier, so we won't go into that. It's just an extension of that. Just explains a little bit more about what it is and the benefits of it and what you would need. Asset-backed funding, just a little bit more there. And so I'm going to conclude here. I said 10 to 15 minutes earlier. We are way past time. But here, let me conclude with this next part. Is there's also cash out refinances. I'm not going to get into all that right now. That's going to be a deeper segment. There's asset-backed lenders for commercial real estate and or developable land. I'm not going to get into all that as well. So if you have commercial real estate or developable land, I can go strictly to an asset-backed lender that is going to fulfill on that. But you would have to meet a specific revenue requirement of at least 75,000 or so in monthly sales, or there's probably a higher number that can change. And a lot of people don't have that, or they don't want to go through that. They don't want to have to give that up. So they look at doing a cash out refinance in a lot of cases. So if you're looking to do that, up to 75, not 80% LTV, if not up to 50% on any land, and also refinance. So there's a few developments in that. I'm not going to get into all the details, but you can also do it to commercial vehicles if you have that. If there's anything that we can withdraw from that. There's sale leasebacks. There's other real estate that you can use if it's efficient enough. You need to pay off other property debt. You need to take out equity to do that. There's a lot of little factors, and not a lot of people will share with you. I'm not going to get into all the exact details on each one of these, but there is that, just so you know. And there's other situations that we can look at. What real estate, what collateral you actually have. Is it enticing enough? But yeah, there's that. On the no doc lines of credit, as I said earlier, it can be hard to get because you don't have a minimum of 2 years with an LLC. And so you can't get up to 50K. Other cases that you might be able to start off with that, even if you don't have 2 years, but it usually isn't enough. And if you're just a startup and you're only getting 25,000, 30,000, you got to look at also other alternatives, because your startup cost, your overhead may be a lot lower, but that amount of money that you need to really amp up, or to look at the next 2 to 3 months as you're investing that enough, and you're actually accounting for more expenses increasing instead of the money that you're generating, and you're withdrawing a lot less cash flow, boom, there's a business gone a lot of times. And then you don't have the funds because you didn't prepare accurately or you didn't go to the right place. Boom, that's another problem. So I'll conclude by saying that there are 0% interest business credit cards. And I created a video, I'll link to you down below. This is through credit card stacking. This is where you can add multiple business credit cards on top of one another, strategically implemented, with myself and the team included, and being looked at and saying, okay, where do you already have credit? How does your credit look like? Because your personal credit will be assessed for this. And that's just anywhere. If you're asking, well, I thought about building a business, and if you had an LLC, they would just look at your business credit or business side. Like, yeah, but there's no history, or it's very little or seldom, or even if it's a lot of history. Like, we have to know who the actual borrower is. What's their likeliness of paying this money back themselves, not the business itself. And there's a lot of problems and legalities, and there's a lot of issues with that. So at the end of the day, it comes down to the consumer of the person. So looking at getting multiple business credit cards at 0% interest for 6 to 18 plus months. There's the Chase Inc. Unlimited cards. There's the cash card. There's a lot of different benefits with 1.5%, 5% on select purchases. You can take that to a US bank, 1.5%, or whatever card you get, but you have to be calculated in what bureau you're pulling from, what you have to do, what you're not doing accurately, what it takes to really qualify for that, and for convenience. A lot of people who come to me are doing it for convenience. They may know how to do it themselves or may try to, but they don't want to learn it, or they've done it before, but they want to do it more accurately because they didn't get as much as they needed. So then they come to me for convenience, energy, and time. You're out there working your deals. You're out there purchasing inventory, or you're trying to scale this. You have 3 to 4 contracts you need to fulfill, or you're on the field. I need to get it done and taken care of. Can you just have me do it done for you method instead of doing it for yourself? Yeah, there's those methods. I can do that. I've done that myself. Or I can go with another company, which I've done before. So it just depends on what you are trying to accomplish and making sure you don't make mistakes. It's the mistakes part And that comes down to you trying to do it on your own. And then you go, oh, well, I can go get another card. Yeah, but did you go to the right one? This one would have given you 20,000. Over here, you only got 15,000. And that 5K difference, it's a lot for a business. Or other times it's 20K here where there's 30K to 40K here. You didn't know how to get 50K to 250K. Should we have started off with a line of credit and then gone into the credit cards? A lot of the times, yes. Other times, I wouldn't recommend that. I'd recommend starting with the credit cards, getting into the line of credit after. And I would wait 3 to 6 months, or I would wait this amount of time depending on your file. So there's multiple business credit cards at 0% interest on that. And just imagine what that could do. Not only from your business, like how much you can revenue generate or how much sales and all this other stuff, but just alleviating your stress, just going home, or if you're already home working, step outside. Be able to breathe more confidently. Not even stepping outside yet to catch your air, but just feeling better about things, feeling less pressure. Go to bed at night on your pillow, subconsciously and consciously feeling fine, and not having to wake up in stress, distressed, like a red alarm, like you see in the movies, when they're going into battle or somebody's been attacked. Oh, see all the red lights flashing and the sirens. You don't want to wake up that way. And that's the greatest relief that I've found, when you can do that and disassociate yourself from things and not having to do everything and anything all at once and being so chaotic. So that's where I will leave it at. Hopefully you got some great value from this. Let me make sure I did cover everything. I had a few things here, and I'm not going to go into all the details of every bank, at least right now. But let me see here. Okay. It does look like I have covered everything. So yeah, wrong. There it is. So that will cover everything. I greatly appreciate you. Thank you for your own energy and time. This guy's beat. I need to go rest. It's already 5:20 Pacific Standard Time. I didn't even have breakfast. I had a brunch at about 12. Doesn't always happen, but there it is. So dedicated in what I do, sometimes I even lose track of time. But with that said, hopefully you got great value from this. If you have somebody yourself, you can't get funding right now, you're not ready for it, or you are, but you'd like to share this with somebody else, please feel free to do that. I'm more than happy to help them and guide them. And if you've been following me, or if just from this alone, again, it's hard for me to be on video. I'm more of a writer than anything. But as an introvert, that's what a lot of people love. They love somebody who doesn't talk much, who just does it, who says, here, I'm going to send you this information. You look it over, you review it, boom, 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 boom. So much easier for you to look at this way, or here's how I need to communicate it with you at this stage. I have, like I said, I've been doing this. And so I have been so diligent about my systems, my processes. When there's automation and that needs to be added, it is, not always, at different stages. So whenever I share with people how to get started, I'm very diligent about who I give my energy and time to. I love the emotional connection as well as the logical connection on things, but I have to make sure that I'm giving the right people the right energy and time. And not because you don't get a call with me doesn't mean it doesn't make sense. Once you come into my ecosystem and my culture, you're going to see it, if you haven't been in it already, why it is done the way that it is done. And when this happens, if this happens, not always does everybody get that. And I've had clients that I have great personal and business connections with that I funded who are doing $2 million a month, 100,000 a month, that would prefer to just do things through email, text, or are okay with it just that way and really understood the whole ecosystem and the whole landscape of it. It's those who don't know are the ones that get the most upset and don't really look out for things on their own, or don't show enough accountability and responsibility. But that's just some tough love, and just make sure you have these things accordingly. If you haven't subscribed, please go ahead and do so and click that bell notification icon so you do not miss any future content I will be coming out with. And that will be everything for now. Look down below again in the description so you can get more information. And I will talk to you soon. Take care.